Well, let me ask you this then. That this raises that question for me that's been bugging me for a while now. I even wrote about it on Twitter today. I'm gonna ask the question, and then I'm gonna give an explanation as to why I'm asking it. Then you can answer it. But how do you plan on making money on those uranium investments? Would be my question, because it's a low chance that they would get into production. You know, the ones that don't have any uranium yet, let alone get into production by the time it's time to sell. So let me explain why I'm asking this is because, and why I'm mentioning what I wrote on Twitter is that most people on that end, on that tweet said that it's obvious. You know, you just get into the stocks that will go up the most. You watch them go up and sell them when they start going down. I mean, it's, you know, it's not rocket science. Okay. Far too simple, I guess, because I'm wondering what happens at that. A lot of people want to start scaling out at an X dollar per pound, you know, that everybody's waiting for. Like that could be, Justin Hughes mentioned in the Uranium Market Minutes yesterday, I guess, that's changing. It's no longer 60. It's no longer 65, might be 80 or 90 or whatever. But who's going to be there to provide that exiting liquidity for those people is what I'm thinking. You know, you have to sell your shares to someone. Could be an institution, could be a retail, you know, a greedy emotional trader, or whatever you want to call it. But and you know, if you're speculating, you're approaching this from the greater fool side, I guess, you know, the greater fool theory, where you hope to find someone down the road to sell your shares to at a much higher price than what you paid for those shares of the same company, oftentimes even more diluted. But then that's another case. But then that becomes a dangerous strategy in my eyes, because it means that you hope for the sentiment to rise that much that new buyers will be much more emotional than yourself, if you want to call it that. And then they'll provide you with that exiting liquidity that I mentioned. And that's when you know, again, you cannot even call it an investment no more if that's what you're doing. It's a huge speculation. This warrants a much smaller exposure maybe, but then here you are 100% into uranium. And so I'm just wondering, what do you think as far as that topic? How do you plan on making money on those stocks?
Well, first of all, I'm already in the money. My portfolio is up about 3 times. So if I, you know, like it would, I hope it doesn't happen, but it would take a fairly big event for me to have to sell at a loss at this point in the game. And what I believe is going to happen is that you're going to see a money-making event that's going to be tremendous, like we've seen again in the past. These are things that happen over and over and over that I've been a witness to. And, you know, one of them is the big technology bubble that we saw from about 1997 to 1999, almost year 2000. It lasted about 3 to 4 years, where a very, very similar phenomenon than what might happen here in uranium is, you know, everything that had a .com to its name did an IPO, listed. I don't know if you remember this or if you've heard of it, but I was right in the middle of it. Some of my friends were telling me that they were going to retire at 33 years old. They had made so much money while their portfolio was up so much, because anything that had .com to it, and people back then, that's when you first started to be able to trade at home with your own platform. That didn't exist before 1996 approximately. So everybody not everybody, people in their basement were just, they'd look for an IPO, any .com stock, they'd buy it the day it came out, it would rise by 5x that day. And they'd ride, they ride, and it became a huge, huge bubble. So what you're describing to me is trying to time the perfect timing of when that bubble is going to be at its peak. And then you want to sell it and try to find someone that's going to be, like you said, a loser that wants to buy it as it's falling and just going to implode.
I think a lot of people are trying to do that. I think a lot of people are hoping for that, because I'd get a lot of flack when I say I would sell then at that price. They would be, you'd be crazy to sell then. It's going to go much higher. It's going to go, double that. Sell when it goes double that.
Yeah.
Okay, but what if everybody's selling at that point?
Well,
You need to find that greater fall. So what makes you think that that greater fall is going to come to uranium this time?
well, I mean, we've seen it happen already. I've seen it happen since I've started investing in uranium, and I don't think anybody so far that's been buying uranium. I don't think there's any fools buying uranium right now, and I don't see that happening for a little while again, unless the fundamentals change. If we see that demand, just gets stripped away and supply is increased by way too much, and nuclear industry gets, really a bad name again, and there's just no future for this sector, well, yeah, it's not going to be good for anybody. But it's exactly the opposite right now, completely the opposite. The supply demand situation is just getting worse by the day. We could talk about that. We've got some numbers here that I can share with you, but it's looking very bright. And I talked to you about the .com, but it's not just the .com. This happens in different sectors over and over and over. So I saw it in the .com. We saw it in the cannabis stocks. We see it in the real estate market. People just buying, because, and it rarely just lasts for a week or a month or a couple months. Here, I think it's going to last as long as we see that price and confirmation at all levels of the nuclear fuel cycle. And that's what we're having now at all levels. We're seeing prices increase. That's going to create interest. That's going to bring money to the sector. And as long as the fundamentals, remain good, then my strategy, as I've mentioned, is to start scaling out slowly. If I had set, well, let me just give you an example. I tune in for all the Cameco conference calls, as you know, and sometimes I even pick up the phone and ask them some questions. And 3 years ago, Cameco had been saying that they were looking for what they called a 4 handle on their term contracts. So they weren't going to sign contracts until they saw the term price in the $40 range. Well, if that had been my goalpost, I would have sold everything, right? Well, if you listen to Cameco now, it's no longer a 4 handle here. You talked about Justin Hume. He said it yesterday. These prices that we thought were reasonable a while ago are much higher now. So Cameco and any producing company are going to be signing contracts higher than in the 40s. And they know that they are now in the driver's seat. And we are just at the beginning of a contracting cycle. And that was highlighted by Cameco's conference call in February, when they talked about the amount of pounds that they contracted last year compared to the amount of pounds that they contracted in the first 4 or 5 weeks of the year. So the contract, there's many pounds that need to be contracted. We're only at the beginning of that. So I don't think it's going to be a rapid, 2 to 3 week to 1 month rise, and then boof, it's going to fall off and be dead forever. I think that if you look at the price of the last cycle, it went up. Then we saw 6 major downturns of 30 to 50% in the last cycle. And that's what we're seeing now. We saw one, we peaked in November, and then we lost 50% of the value of our equities, from top of November to mid-February. So we're going to see these cycles. Now, people are trying to time these, because people that came in last fall, at the height of it, they got burnt, and they're sore about that. And when you're trying to time something, that's what happens. So I understand it's not fun when that happens, but when you become impatient, then you sell. And if it doesn't rise again, then, of course you lost money. But I think we're just early innings here. I think that, like I said, we're going to a spot price of over 100. Some people speculate, 180, 200. Some people speculate much higher than that. I can, I don't see any reason right now why we would not hit the same price of uranium that we saw in the last bull market of $140 a pound.
Hmm.
I just don't see any reason why that's not going to occur right now. Like, things can change. We could get new information, next week where something happens and the fundamentals change. But with the information that we see now, I think that we're easily going to hit at least $140 a pound uranium in this cycle.
And by the way, what you said about the people who trade I personally applaud those people who employ options and they're trading and they do 1,000 different things and they're making money. It's good for them. I applaud them. I get nothing against them. It's just not something that I'm doing. And it's this is something that it was kind of, and it still is kind of difficult for me to understand. But somebody's got to have to lose money here for somebody else to make money. That's sort of how the markets work. Somebody's going to have to. Somebody, when we're talking about the speculating side of things, and that's one of the reasons why I'm not putting too much importance. I'm not putting all my eggs in one basket in terms of a strategy. So I have some M&A targets in my portfolio, for example. So how do you make money out of an M&A? You get it paid off. Basically, I have some producer targets in my portfolio who might eventually start paying some dividend. So you make money off that dividend and stuff like I have a big portion of companies in my portfolio that is either, and Menachem told me that same thing. It's crazy, but it's sort of how I have that too. Is that I have some companies, not all my companies. I have speculations obviously in there too, but some of my companies are companies that I would either not mind owning, even if the price is much lower, meaning maybe companies that are producing but are making money and then paying off a dividend, or my exposure is so low that it doesn't really matter to me. Like it doesn't hit me too hard if something happens. It's gonna sting, but as Rick Roll says, it's not gonna change what I have for breakfast. So that's one thing that I did want to mention here. But you're gonna have to sell into some money, into somebody's money, and you're gonna have to sell into liquidity. And I guess you said it. I guess you said it correctly. There's not much to add here, but that's what it comes down to. And that reminded me, because I'm going to lose my thought here if I don't ask you this right here. But I've started employing this practice recently, where I'd ask the current guest of the podcast to leave a question for the next guest. And so my previous guest, the one who left the question for you, was Doomberg. I don't know if you saw that. I don't know if you know who Doomberg is, the green chicken on Twitter. Definitely worth a check. But so he wanted me to ask you, Terry, if you he was wondering, basically, he wanted me to ask you what you would do if this investment thesis doesn't play out the way that you expect it to, considering that you're all in on uranium. So what do you say to that? What's your plan B?
Well, I think that to preface my strategy is to say that, like my wife and I, luckily, we're retired with a good pension. We have a comfortable life. So, I'm not approaching this from a position where, if my strategy doesn't work out, then we're going to be on the street and we won't be able to enjoy the lifestyle that we enjoy. So I'm not at the same position as someone that would be starting off right from scratch here. So I can afford to take this risk that I'm taking, and I understand what the risk is. And then as I've already mentioned, it would take something pretty bad for me to lose all that money, or to even not make money, because my portfolio is up 3 times already. Now, you're absolutely right. This is not the strategy that most people preach. Most people will say, don't put all your eggs in one basket, diversify, so that you could have like a more sort of steady kind of rate of return with less risk involved. However, there's also other people that say, find one good idea and stick with it. And there's also other people that have become fabulously wealth only with one good idea. Most people that are multi-billionaires, like Zuckerberg, like Gates, like Bezos, like most of these huge businesses today, all of their eggs are in one company. So when you see an opportunity like the one that I see in uranium, and with the knowledge and the experience and the what I've seen in the markets in the past, to me this was the only way to go for me. You know, because I truly believe that we're just getting started, and everything that I've looked into, that people that know anything about the uranium sector, absolutely everything. And shout out to Mike Alkin, because he is the guru. It's too bad he doesn't participate on social media anymore or do interviews, but all that research, all that theory behind this sector is playing out exactly like we had imagined, only probably 5 to 10 times better. So I'm comfortable with the strategy of 100% uranium, and with most of my portfolio in explorers, by the way, I'm very comfortable with that, and I'm willing to accept the risk that comes with it.
That's a good point. I think you brought that over